Thank you, Mr. Chairman, and thank all of you for being here today. And I'm a small business owner from Texas. 52 years I've been in business. I'm a car dealer. Every day I've been involved. I owe money to a bank every single day for all that period of time. And I'm really worried about where we're taking our banking system that would affect Main Street. I'm worried about my bank having being able to loan me money when I need it. So over the last year, our nation's federal banking agencies have been bombarding our financial system with excessive regulations and dangerous proposals like Basel III, long-term debt requirements, and climate risk management standards. It's also alarming that our banking agencies are rolling out these types of proposals in a rushed fashion without considering how these combined regulations and requirements might impact innovation, limit access to capital for Main Street for small business, and threaten economic stability. So, Vice Chair Barr, you claim that Basel III proposals contain a meaningful analysis. However, from what I see, the Basel proposal is over 1,000 pages long, and less than 20 of those pages cover an economic analysis. So given that proposal will overlap with numerous other existing requirements, I find these 20 pages insufficient for a complex proposal like Basel. So why do you keep ignoring Congress's request for a full economic analysis?
I believe that the proposal contains economic analysis that supports the rule. We obviously are open for and welcome to comments. Happy to receive analysis if people disagree with us, and to take that into account in our normal notice and comment rulemaking process.
Now, I've been actively working with members on this committee and the Committee on Small Business to be the voice for Main Street in the rulemaking process. Main Street America, the whole, what our country is all about. And Mr. Barr, earlier this year, I sent you a letter with my colleague from Pennsylvania, Mr. Musser, which expressed our legitimate concerns that Basel III will significantly impact America's ability to access reliable credit and increase overall borrowing costs. In a time where interest rates are already making it harder for small business to access capital, this proposal would be disastrous, and couple it with the economy we got now, it would stop things. So again, to you, Vice Chair, will you abandon the provisions calling for elimination of banks' use of supervised internal models in determining capital requirements?
Thank you for the question. We do not believe that the proposal will have a significant effect on credit conditions. Most of the proposal deals with trading and other non-lending activity. Small banks are not part of this proposal. They're responsible for doing lots of small business lending. And even with respect to the small business lending that big banks are doing, the proposal keeps the current approach with respect to capital treatment for small banks and provides some opportunity to get a lower risk weight if small bank lending is part of a diversified portfolio, for example. So we do not anticipate the kind of effects that you're describing, but we are, of course, open in the comment period to hearing that. If we need to make adjustments to our approach, we're very open to doing that if it's supported by the analysis that we get.
Well, a good analysis is talking to Main Street America. The banks are nervous. The banks are already getting scared to death of this. So the Federal Reserve recently released the Community Reinvestment Act rule, which was nearly 1,500 pages. This is a massive overhaul for smaller banks in my district that do not have the legal and compliance teams to deal with the undertaking that comes with 1,500-page rule. Community banks are already struggling under the current regulatory agenda. We should not be adding more burdensome rules that will increase compliance costs. They're hiring more compliance officers than our loan officers. Again, that affects Main Street. We should be focused on allowing these banks to thrive, not trying to regulate them to death and, frankly, let them compete. So quickly, Mr. Grunberg, could you explain how federal banking agencies are working to educate smaller community banks on compliance and not just throw a 1,000-plus page rule at them and expect them to perfectly comply? Because what will happen, like all small businesses, they will decide to get smaller rather than bigger because they fear all these regulations. And then, again, that affects Main Street, that affects me, and then it affects people being able to hire people, et cetera. So could you please answer that question?
Yes, Congressman, thank you. Thank you for the question. We were quite sensitive in the Community Reinvestment Act rulemaking to its impact on community banks. So all community banks with assets under $600 million, which is over 3,000 community banks, will have no regulatory change from their current treatment under CRA. The new rulemaking will not impact them at all. And for banks between $600 million and $2 billion, which is frankly covers most of the additional community banks, they would have only a marginal change and no additional record keeping. So I think as a general proposition for banks under $2 billion, which is the large majority of community banks in the United States, there should not be a consequential.
Gentleman's time's expired.
Time's up. Thank you very much.